What's up, YouTube? In this video, we're going to analyze Airbnb with 8 different valuation methods to find a fair market value and a purchase price. And then we'll take a peek at the technicals to see if the technical charts support our prices. So come over here, year to date, Airbnb is up 50%. Over the course of 1 year, it is up 14%. And then we're going to hop over to their financials here. They currently have $10.4 billion in cash, and then they also have only $6.9 billion in debt. They got $3 extra billion left over. And then on top of it, this company produces $5 billion of free cash flow annually. Their overhead, their CapEx is only $15 million um, every 6 months, $30 million a year. Really good. I just want to throw that in there. Uh, Now we'll hop over to the valuation spreadsheet here. We got Airbnb for ABNB for the ticker. Future EPS growth 25%. They do not pay a dividend, and forward revenue growth of 14%. So we come over here to our PEG ratio here, 2.65 today, a little rich, and forward PEG of only 2.17, still rich, even in the next 12 months. And we come up here, we have a couple peers that we can compare against, and they're giving us a $92 for a fair market value. Hop over to Graham's valuation here. Graham's is almost identical price range at $92.76. Then we got our manual PE at our cash and cash equivalents of 10.4 billions. Debt 6.9. Cash from operations annualized is $5 billion. Yeah, that gives us a manual PEG of 1.13, a multiple of 15.75. So based on their current cash and market cap, it's a pretty good deal. Price to book ratio sitting at about just shy of 20. Let's hop over to discounted cash flow. We have over here, we entered in all of our numbers to get a weighted average cost of capital of 9.4%. That populates over here. Perpetual growth rate of 2.5% with a growth rate of free cash flow of 23% forward looking. So we type in all of our cash flows over the course of the last 5 years, and the cash flow growth on this company is incredible. 2020 here was actually a negative for cash flow. I just had to put something in there, otherwise it wouldn't have worked. It wasn't negative by much. It was a couple, maybe 20-30 million dollars or something like that compared to 2.9 billion dollars. So this number, this average growth rate is irrelevant. It doesn't work. But this is also during COVID when nobody was going on vacations or anything like that. So give this an annualized growth rate of 23%. So we'll just plug in the annualized growth rate of 23%. And then this gives us our annualized growth rate going forward. And in 5 years' time, this company could be doing upwards of $12 billion of free cash flow per year. Come down here, cash and marketable securities is 10.40. Our debt, 6900. Our outstanding shares is 684. And it gives us a discount cash flow price per share of $187. We're here, Rule 72. We have our EPS, all this entered in, lowest EPS growth rate, 23%. Over here, we can come, 23 goes into 72 3 times. 3 times goes into 10 years, 3.19 times. So what we do is we take 3.19 times and double it every time. So we'll just round that up to 3.5. So 3.5 doubled is 7. 7 doubled will be 14. And then 28. It's down here, it's doubling for me already. So we know our EPS in 10 years' time is $27. Or sorry, 27. So 27 Gives us a fair market value of $310 per share. Purchase price is $217. We have all of our multiples, all of our valuations that we figured out on the past few sheets here. And it gives us an average price of $152 a share with a purchase price of $106 a share. That's including a 30% margin of safety. So right now, we'll hop over to the stock chart, and currently trading at $127 a share. And based on technical patterns here, it looks like we might have a little bit of room lower, maybe down to the 120 range, before it might, retest this basically make a higher low, which is great, and then shoot back up, which currently the technicals support what the valuations are saying. Um, the valuation, we'd like to buy it down here, which would be great. You get it for like $106 a share, and then ride it up to about 150, which is right about here, which is, you know, within reason. I mean, it's probably not going to give us a full 30% margin of safety. And we can assume that Airbnb is probably going to retest this and maybe retest the top of this channel again. So that would give us, 127, we'll just call it 127, where by the time it gets up there, maybe 160, 162. So, based on technicals, it's in a good upward pattern, upward trend right now, although overall, in the broader scheme of things, it is still in a downtrend and making lower lows and lower highs. When you look at the broader side of things, that's what it's doing. But in the macro trend here, it's making higher lows back up to this downward trend. But that is what I got for Airbnb. If you found value in this video, like and subscribe. Also, if you are interested in Airbnb, let me know down below what your plan is. But that's it for Airbnb. Thanks for watching, and we'll be back soon with more.